Good afternoon, everyone. It's 4 o'clock here in the UK on the 6th of July, 2023. And as I tried to get across in the title of this piece, markets would seem to have come back from the holidays with one hell of a hangover. Interest rate worries on both sides of the Atlantic causing a marked sell-off in the US, as you can see. S&P down nearly 60 points, and the London stock market down significantly as well on the back of interest rates going up to about 6.5% relatively soon. Those have been fully discounted into the market. So we have this overnight change in direction from an up. That means the short-term trend is up, the underlying trend is up, and that's all changed today. Now, if we actually go through to the end of play, that's a long way away. That's not 5 hours away. We shall have a confirmed down today, but that can change during the course of the day. Remember, markets are live during the course of the day. So the advice on VectorVest is to sit on your hands and do anything else apart from buying stocks. So let's just have a look at some charts. But a knee-jerk reaction in terms of interest rates. So if we have a look now, and I'm going to start with the S&P 500. I trade it actively, and that's a weekly chart, and I've gone back a year, 2 years nearly, to the top of the COVID bull market. That maybe a little bit further, yeah. That was in November 2021. And we've been down since that. We've been rallying. Is it a rally in a bear market or is it the start of a new bull market? That's the question that clearly everybody's asking themselves. Now, I expected when the market had broken the 62% retracement of this pullback that it came back and tested it. I felt that it was going to actually get to the 786, but that doesn't seem that likely today. Prices are rising, and my old faithful, the 8-week stochastic, has made a double top and a falling top, and that's a very special relationship on the stochastic. Prices are rising, but the indicator can't follow once, makes a double top, and then makes a falling top. That's a pattern that was first noticed by a South African technician called Clive Rothie, and he swore by it. So quite a dangerous momentum pattern. Now, if we go to the daily chart, excuse me, if we go to the daily chart over the last 3 months, there's the rally. As you can see, the stochastic, 8-day stochastic in this case, is right up in the overbought area, right down in the oversold area. Oh my word, you could do a lot just with that simple stochastic. But the really dangerous thing from the old classic technical analysts, which I'm one, is this island reversal. Now, they're not that common, but my word, look at this. We've got a gap up, we've got a gap down, and the stochastic at the same time. We had 2 inside bars here, and I would have loved to have been short at the open, but it fell so fast there was no chance of getting filled, certainly not with a UK spread betting company. It was falling. So I've got a position now. I'll show it in a second, but certainly well off the best levels. And it is a small position. And you can probably hear by my voice that I'm not in the best of shape health-wise. So keeping the positions relatively small. So if we now go to that, that's the position. It's again one of my inside bars. I know many people have got questions on inside bars. Do you wait for the mother bar to break, or do you take the inside bar? Well, here I don't think there's much discussion because they're pretty much one and the same thing. I watched it here. Get rid of that. I watched it and I missed that excursion. That happened in a microsecond, that excursion, but I actually sold it just after that close. Okay, and I'm currently short here. Just remember, folks, that there are only 4 things that you want to look out for. Big win. I know I said this before. Big win, small win, break even maybe, small loss, and a huge big loss. And your job is always to make sure that you don't have any huge big losses. For the moment, my stop loss is still at the initial stop loss, which is up here somewhere. Very, very, very small risk for me. If it actually goes AWOL, it'll certainly not do any damage to my spread betting portfolio. So for the moment, I'm up about 10 ticks on that position, which is not, which, doesn't sound much, but if you do 10 ticks a day, you can do exceptionally well. Markets are unfortunately not linear creatures like that. And when you've got a trend day on your hands, then it's really, really important to take all it's got, because on some days there's no trend in place at all, and the good Lord himself couldn't trade it. So, and you end up taking 2 to 3 losers. I don't like to take any more than 2 losers before I quit for the day. So if we have a look now at the 3-month chart again, we can see that there is a trend line here. Get rid of these fellas. There is a trend line in place. How well I've drawn it, I really don't know, but I think you would agree that there's something in place. So we could certainly bounce from here, but if we don't bounce from here, then the next support point in this case would be that 61% retracement, or that low, which are just a few ticks away from each other. Okay, so let's see how it goes. This has been a very strong reversal this afternoon, and these island wedges have been very, very lucky for me over the years. There's not that many people follow them anymore, but they're a part of classical technical analysis that seems to have been forgotten. The gold price is falling. I think I've got a chart of physical gold here somewhere. Yeah, here we go. There's the daily chart. And I'm very disappointed with myself that I didn't get in. There was a lovely upthrust here at 1931, but as I say, yesterday, I was in hospital yesterday, so I didn't get that. And then there was an outside bar, and I suppose I could have got short at the low of the outside bar at 1915, but I haven't. The really good entry was up here. I still think that this can actually get down to somewhere down around, it's a long way to fall here. I know it gets through 1900, but somewhere down around here. Sooner or later, there's a really cracking buy-in opportunity in gold, as I bored you with so many times before. Let's look at a monthly chart to see that maybe a bit better. Get the scaling right for you, David. Yeah, that's this monthly cup and handle pattern that I think is playing out, but I think we need one decent pullback now to scare the dogs and the cats before it goes. Remember, we've now got 1, 2, 3, and the next break, if Mr. Gann's correct, we're going to break on the 4th attempt. So I think everybody should be formulating a plan regarding gold and silver. Silver will move with it. Many technical analysts who focus on gold and silver reckon that the move in silver will be stronger. These people tend to be quite emotional, and gold bulls are always perpetually long on gold. But that pattern looks very strong to me. Clearly, if we were to sell off below 1609, then the analysis is null and void. It's always a good on a chart to have a place where you say that my thinking is just rubbish. So that would be, if we break down below that level, then all this thinking is rubbish. But this looks like a perfect cup and handle to me. But I'm going to give it a couple of weeks yet, towards the middle end of July, before a bottom will come in. Oil is still doing pretty much nothing, sitting around 70, 70, 71. There's a great deal of talk in copper about copper scarcity. The London Metal Exchange has basically run out of it, but it's not having a great deal of effect on the actual copper price itself. So just remember when you read these pieces that the journalists stroke economists that are actually writing them are thinking in decades rather than you thinking about a spread bet or a futures contract or a share that you would like to see move in 3 months. So let's go back to the SPX. SPX not doing much. This is quite typical at a major trend line, folks, that the bulls and the bears will be fighting in here. And I know that the bears have lost ground a lot, so they'll be looking to try and make it up here today. So I seem to have lost my intraday chart, but that's the situation now. 4185, I think by my calculations, I'm up about 14 ticks in the position. And I'm going to do my best to try and let it run. Try and maybe get my stop loss up to the entry point if it gets down to about 20 points in the money. So maybe six points to go before I bring my stop to entry. Focus on your mind, folks, should always be no big losses. If you can get that right, everything else will take care of itself. Hope you find that useful. Thanks very much.